Good morning and welcome to Investor Day for the presentation of Multitude investment case. My name is Antti Kumpulainen. I'm CEO of Multitude and I've been in the company almost 10 years now. What is Multitude? And I start from the investment case for your interests. That's why we are here. Multitude is a growing fintech. We are highly resilient in all market conditions, and we have a track record which we can prove on it. We are a market leader. We are increasingly profitable. This is one of the things I'm extremely proud of. Being profitable is in our DNA, not just growth, but profit. And we are also paying dividends, which we can show from our historical performance. We've been around already 20 years, and this success in fintech is a proven record. Multitude started 20 years ago in Finland. Since then, we've been expanding our operations around Europe and beyond. What we are today, we have a 20-year track record of profitable fintech innovation, which is focused on customers which are pretty often overlooked by traditional banks. We are providing them solutions that they are happy with and comfortable with, and we are making sure that they will stay our customers since they usually are extremely happy with the services. What we are going to be in the future, we are scaling up Multitude platform, and our target or ambition that management set a few years ago is to becoming a unicorn, 1 billion valued company in 2028. Our vision is to be the most valuable financial platforms for the overlooked customers. Our mission, on the other hand, is to democratize financial services through digitalization, making them fast, easy, and green. Like I said, we've been around for 20 years now, and we can see that we are moving our business in certain cycles. Everything started 2005 in Helsinki, Finland, where Multitude started with the name Ferratum, providing fast and easy credits for customers, fully digital without any hassle. Since then, we've been going in clear cycles. First, we build something, then we scale it up. We build, we scale, we build, we scale. And we can see now that we are in different cycles, around cycle number 6, I would say, today. First, we built the lending processes fully digitalized, rolled out to new countries. After that, we understood that we need to have a banking license for more efficient funding and also to go to certain markets in Europe, such as Norway, Germany, Spain, France, which require a banking license. So then we had a transition to regulated environment. We scaled that up. 2015, we were listed in Frankfurt Prime Standard. That was why we chose Frankfurt. We had a lot of bond investors in Germany, and they wanted to be part of our success, and also management at the time saw that this is a great opportunity of scaling up the business. We got 50 million euros new equity, which we have used quite wisely for scaling up businesses further. We started a multi-product strategy after that, added SME lending into the business, own deposit taking into the business, and rolled out again to new countries. We gone through agile transformation journey back in 2021. We founded wholesale banking business unit, and we also relocated our headquarters to Switzerland end of last year. Now we are on the 6th generation, which is scaling our Multitude platform further. Few words about Multitude's growth platform. Today, we have 4 different platform customers types. We have our consumer banking, Ferratum, business banking, Capital Box, wholesale banking, Multitude Bank brand. And on top of that, or on the side of that, we have our investments and partnerships into our associated companies, such as Lea Bank, which is a Swedish listed bank, which we own almost 30% of. We also own 20% from Sorter, which is a really well-doing loan broker in Finland. We can provide to all of these platform customers our tech, our compliance knowledge, funding capabilities in the extent that the business unit needs those. Today, Multitude is serving three business units, three different type of customers. Consumer banking, SME banking, which have secured and unsecured lending, and factoring. Multitude Bank, wholesale banking, which is offering secure debt solutions and payment services. More to the business units. Consumer banking Ferratum, we are offering unsecured lending for unplanned financial needs. We operate in 13 countries. Portfolio is almost 520 million euros. What is important, everything is fully digitalized end to end. We do not have any hassle of meeting people physically. You can be reliant on us being fast, digital, and you will get your product no matter what is the time of the day based on, of course, jurisdictions. Our customers are often overlooked by traditional banks, which doesn't mean that they would be underserved. There are multiple reasons, speed, convenience, that the other banks cannot provide. Our business banking unit, Capital Box, operates in 5 countries, serving more than 9,000 customers. End-to-end digital, fast, unsecured lending products for SMEs when they really need it. We are growing with our customers in Capital Box as well. We do also offer secured lending for our customers and factoring, secured lending up to 3 million euros in only few days of time. Our newest unit, wholesale banking, has 2 legs to stand on. The first one is secure debt, where we are tailoring solutions for our customers. The tickets, the loan amounts are quite different than in other businesses, starting from roughly 5 million, ending up to 35 million based on customer need and obviously customer capability of handling the credit line. These debts are fully secured. Well collateralized, normal maturity is between 2 and 3 years, and the yield is around 9.5-10% based on the case. The other leg we are standing on is payment services. We are serving electronic money institutions, payment service providers, and other fintechs with their payment topics. We are direct participant in Swedish clearing and settlement in Bankgirot Riksbanken. We have directly SEPA, Czech korunas, Danish crowns, other currencies we can also provide. We know the pain of fintechs. We've been 20 years in the business. We are a fintech bank. We also have had our pains in the past, and now we can help others. We have unique strengths that we continue building on. We have deep understanding of overlooked customers. We know what they need. Our risk management capabilities are superb. We have our internal proprietary scoring models, in-house data platforms, in-house data science teams, which are all the time monitoring, making our credit decision processes, underwriting processes better and better. We are flexible and we can scale. This is important. We've always been building, scaling, not only standing still. We are flexible in that way, which comes to our 4th unique strength, entrepreneurial culture. We always are finding a way to move forward. We don't say no, but we say no, but, and then we go forward once we have solved the but. Our dynamics in the business are quite simple. We need to grow the revenue. We have 3-pillar growth mode: organic, partnerships, and M&A, and we have executed on all of those. We are reducing our cost constantly through AI automation, making things smarter and smarter. And this brings the customer value up as well. Without the customer value, we have nothing. It's extremely important that customers feel valued, they come back, and they know what they're getting every time. Looking at our revenue streams, if you can see from 2021 to 2022, majority of our, and still the majority of the business is coming from consumer business. But since 2023, we already see that on top of SME business and consumer business, we have added wholesale banking. And this segment, together with Capital Box SME lending, is growing quite fast. So we are not only reliant on one business unit, we are definitely growing in all three. We can see that the portfolio by region business unit is quite well already established. We don't have only one business unit having the whole portfolio or only one region dominating, quite well balanced. Our funding structure going forward is solid. We have our own deposit-taking capabilities in multiple countries. We also do use platforms for deposit taking. Around 960 million euros of our funding is coming through deposits, and then we have different bond equity instruments on the market, both on the group level and multitude bank level. What we do have, important for you to know, we have no upcoming repayments of debt instruments in 2025. We have issued successfully bonds in the past, the latest one being Tier 2 in a multitude bank level. And we are also looking possible non-diluting instruments on AT1 to be possibly placed in the near future. Important for the debt capital and cost of the debt capital is that it's on a declining trend already for a while. For you as an investor or potential investor, what is important is that we deliver what we promised. This is what we have done. Back in 2021, we promised that for the next 4 years, we will meet our guidance. We had an EBIT guidance at the time, and we already at 2020 end told that we will grow it 50% year on year. We made it in 2021. We said guidance is 20. We made it. 22, 30. We made it. 23, 45. We made it. 24. We made it. We have also been paying dividends. Our dividend policy is that we will pay between 25 and 50% in dividends of our net profit. This is obviously historical data. Every year we make a new decision on that, or the board makes new decision and AGM at the end of the day. But you can see that, for instance, last year we paid 25% base dividend and an extra dividend, getting the dividend payout to 0.44 per share, more than doubling it from 2023. We are expecting to double our net profit by 2028. This is important. And you can see the dynamics. Volumes are growing. We are really focused on cost efficiency, making things smarter, faster, cheaper, without compromising on quality. Our asset quality, on the other hand, has been tremendously improving during the last years. We are on the right track, and we are continuing on that track. Key takeaways from this meeting. First of all, our new guidance for 2026 to 28 is an annual increase in net profit of 20%. We are focusing on our three-pillar growth model, which is organic growth, partnerships, and M&A opportunities. All of our business units are looking after those, and we already have a really successful case in Poland for our consumer lending, and also sales partnerships from other units, plus M&A, successful M&A stories from Capital Box factoring business. We are focusing really strongly on increasing usage of data, AI, and further automation. We don't have to make a digital leap. We have been digital since day one. We are expanding the digitalization, automation even further. We continue in our core segments of serving the customers which are overlooked by traditional banks. There might be a solution that the normal bank is not providing when you need a larger credit line of 30 million euros. Our wholesale banking is there. When an SME customer needs a convenient, fast solution for working capital, Capital Box is there. When a customer needs, for unplanned financial needs, alone Ferratum is there. And at the end, extremely important, our ambition to reach 1 billion euro valuation by end of 2028. This is a management dream and ambition. I don't say it's easy to do, but I strongly believe in it, and we are absolutely working towards it. Should you like to ask any further questions from us, please contact us in our IR department, or you can find more information on multitude.com, and we will definitely answer your questions. Thank you. Have a good day.